Good morning, ICP fam. So we talked in the last video, 4-step plan to recovery. Step 1, completed. 2, completed. 3, completed. ICP has reversed trend. Now we're back past the kill zone into the area of interest. And now we're back coiling up into the accumulation phase that ICP was in for such a long period of time. That was previous resistance. That is now support. We're going to be looking at projections for ICP and how the recovery begins from here. And just take a step back, just look at the ICP chart, pat yourself on the back, and just understand exactly the chart told us a story. We understood what needed to happen, when that thing needed to happen. That confirmed the reversal. And now we're going to be talking about projections because this 4-step plan has now been completed. There's step 1. That was the lower high, completed, bam. This was the second one, 50 period moving average, resistance, broke through, bam, step 2 complete. The lower high at the top of the kill zone, that was an important one because this confirms a trend reversal. Once we get a break, once we get a close, and once we hold above that. That was step 3. Step 4, 200 period moving average. Above the 200, you're bullish. Below the 200, you're bearish. We got a rejection point right at the top of this wick. Right at the top of this wick up here at $6.60. That was pushed back, pushed back, pushed back. Where did we test? 200 moving average. What is that now? That is support. So we're holding the 200 moving average as support. The 200 moving average is currently sat at $4.89. That is the big support base that we need to hold before we get a continuation. So as long as we hold this area, $4.89, we're expecting to look for projections. So we've recovered the 4-point plan. We're now looking for projections. Where's the first projection? It's going to be at the top of this range. Why is this range so important? Clues look left, $6.13. How many times was this range respected and rejected? Once, twice. There's the 200, rejected, 3, and 4 times. This range has been a reaction point for the whole of this range, which is going back all the way since April 2025. So what happened? Price got pushed back. Price got pushed back. We understood that that was a rejection level. We understood that people were taking profits at $6.13 at the top of the range, the same as they were here and the same as they were all the way through this accumulation phase. Now, this is the important thing because we need to hold the $4.89 and we start grinding up, grinding up, grinding up and pushing back towards the $6.13 to take back the $6.13. And that, my friends, is going to push us back into the acceleration gap. So you take back 613. Once you get a break, once you get a close above $6.13 for the first time in the whole of this range, that means you've got limited resistance all the way back up to $9.26. So you've got $9.26. Once you break $6.13, I'm expecting price to rush to there. Then once you get to there, you've got your next resistance barrier at the top of this wedge, around about $12.59 currently. And if we zoom out, we zoom out, we zoom out, we can see that this has been hit several times in a bear market, And we're expecting, when we get an on-risk rally, for this to come back and at least test this as resistance. So that's what I'm looking for in ICP, guys. 4-point recovery plan from last video has been completed. You let me know in the comments what you want me to cover next, and I'll see you then.